Hello and welcome to MediaNama. Late last month, the Securities and Exchange Board of India, or SEBI, fined Basant Maheshwari Wealth Advisors LLP rupees 4 lakh for infringing SEBI's investment advisor regulations. The penalty was levied after the regulator inspected Maheshwari's firm from October to December 2023. However, before delving into the specifics of the allegation against the firm, let's look at SEBI's investment advisor norms. In India, only SEBI-registered investment advisors or IAs can provide investment advice or recommendations. As per SEBI's 2013 guidelines, for individuals or entities to be impaneled as investment advisors, they must satisfy certain criteria. Firstly, entities should have a professional qualification or a postgraduate degree or diploma in finance, accountancy, business management, commerce, or economics. In the absence of a graduate degree in any of these disciplines, applicants should have at least 5 years of experience in activities relating to advice in financial products and securities. Finally, investment advisors must be worth at least rupees 5 lakh in assets. Going back to the case at hand, SEBI noted three violations by the Maheshwari firm. To begin, the company was found to be double charging clients fees under both the fixed fee mode and the assets under advice or the AUA mode. This breached Regulation 15A of SEBI's guidelines, which mandated that investment advisors can only charge clients by one mode on an annual basis, with any change in the mode taking effect after 12 months of such an indication. Responding to this, the company had claimed that its offering of multiple advisory services fell within the ambit of SEBI's guidelines, which had envisaged such a situation. The company also claimed to charge a quarter's fee in advance to its client portfolios with the AUA-based pricing model. Despite this, SEBI argued that the process must comprise certain guardrails, like informing clients about the AUA details and maintaining records. Moving forward, SEBI also contended that the firm failed to conduct an annual audit required for a portfolio manager as per its guidelines. To explain, Maheshwari firm was found to be conducting investment advisory business by exploiting its portfolio manager registration instead of an investment advisor registration and by utilizing the exception provided to portfolio managers under the IA regulations. Answering these allegations, the company claimed that it complied with the regulator's mandate on applicable advisory regulations while onboarding clients and providing services like risk profiling, suitability assessment, and KYC check, among others. Notably, the firm contended that since they offered IA services as registered portfolio managers, they conducted the internal audits per the Portfolio Management Services Norms or the PMS norms. In a more forward looking statement, the Maheshwari firm stated that it would conduct its audits in accordance with the IA regulations from fiscal year 2025 onward, noting that the company received its investment advisor license recently. Besides the aforementioned accusations, the regulator found the company guilty of wrongful advertising practices. As per the board's adjudication order on the matter, Maheshwari firm was found uploading YouTube videos with exaggerated captions on his channel. These included claims like 100 गुना प्रोफाइल 3 साल में कैसे किया 1 करोड़ को डबल कैसे किया explained in 2 minutes and 10 साल में 10 गुना और 20 साल में 100 गुना कैसे करे among others. Countering SEBI's allegations, the firm first claimed that the videos were curated for an educational purpose and to enable knowledge sharing among the general public instead of influencing investors to indulge in the purchase or sale of stocks. The company also claimed that while providing his insights and or views on different securities, Basant Maheshwari refrains from recommending any stock for purchase. The firm argued that since their videos provide investor education, they are not liable to adhere to the advertisement code under the finfluencer guidelines issued by SEBI. They argued that SEBI's show cause notice to them cherry picks titles of videos while failing to appreciate the true meaning and import behind them. Justifying its videos, the company noted that it voluntarily adds the standards disclaimer clause in the description box of its YouTube channel, as per SEBI circular. Contesting this argument, SEBI said that the standard disclaimer hadn't been listed explicitly and clearly, and instead through a PDF link. Additionally, SEBI claimed that the firm provides a link to their small case website in the description box with the statement, "Invest in our small case," thereby influencing investors. Overall, the market regulator concluded that the firm's actions contravened its advertising code, which explicitly bars inconsistent statements or exaggerated and unrelated claims to the nature of risk and return profile of a particular product. While defending itself against the claims made by the market regulator, Maheshwari Wealth Advisors appealed against the imposition of a monetary penalty. They held that this would tarnish the firm's reputation and have a detrimental effect on investor confidence. The company had also initially filed to settle the matter, but later withdrew its application, allowing the proceedings to continue. Finally, while SEBI rejected these claims and ordered the company to pay the penalty within 45 days, failing which the regulator may initiate consequential actions against the firm. Notably, SEBI's decision isn't a one-off instance. In the past year, the regulator has tightened its vigil on unregistered financial influencers or finfluencers. To explain, in October last year, SEBI directed all its regulated entities, or REs, to terminate their existing contracts with unregistered individuals providing advice on securities on the internet without its explicit permission. REs like recognized stock exchanges, clearing corporations, depositories, and agents were recognized under the guidelines. However, these restrictions did not apply to influencers associated with a specified digital platform or an STF or those who provide investor education. Its directions followed fines worth Rs 17.2 crore and Rs 6 crore levied on finfluencers Bap of Chart and PR Sundar, respectively, for providing investment advice without registering with the regulator. In January 2025, SEBI further restricted market entities from engaging with finfluencers and forbade educators from using the market price data of the preceding 3 months or the code name of any security while sharing their content. Speaking to MediaNama previously, founder and CEO of Capital Mind, Deepak Shenoy, termed the move a mechanism to prevent the usage of current prices as educational content, which in reality constitute investment advice. Later in March, the board issued an advisory mandating its verification for REs before uploading advertisements on social media platforms. SEBI directed such entities to sign up using SEBI registered email IDs and mobile numbers on social media platforms, following which such platforms would conduct advertiser verification as per the necessary practices. Besides this, since October 2024, SEBI, while working with social media platforms, has removed 70,000 misleading posts and handles. Overall, SEBI's order on the Basant Maheshwari case reaffirms and explicitly states that the advertisement code applies to any form of communication by investment advisors, including that on social media platforms that influence investment decisions. Further, while calling out the inadequacy of the embedded disclaimers, SEBI directs investment advisors to properly and overtly make such mentions. In essence, as SEBI's crackdown on advertisement, investment advisors, influencers, and claim circulation on social media continues, it will be interesting to note how the regulated entities navigate these guidelines and how many enforcement actions the regulator takes. Besides this, SEBI, in update to its X handle, SEBI_awareness for cautioning investors, has recently unveiled another official handle at the rate SEBI_updates to post notifications about regulations, orders, circulars, and press releases. Thank you for watching. For more tech policy updates, subscribe to MediaNama.